The state of the 2024 Manhattan real estate market is on many people's minds. The quarterly reports just came out, and typically there is a very clear narrative that you can glean from these reports, but last quarter, the first quarter of 2024, was a different story. If you want to understand the opportunities and weaknesses in the Manhattan real estate market, you're going to want to watch this video. How's the market is a question I always get from buyers and sellers alike when the quarterly reports come out. But without a clear narrative, I decided the best way to help everyone was to do a classic SWOT analysis. So I looked at the strengths, the weaknesses, the opportunities, and threats, and that's what this video is all about. There were three strengths in the market. The first is that co-op sales gained market share, 3%, while condos lost 2% and new development lost 1%. Co-ops are frequently maligned, but buyers who were looking for value-driven properties chose these investments instead of a condo or new development. In terms of active listings over the past 2 years, the East Side has demonstrated remarkable stability, proving once again that real estate is location, location, location. The Upper East Side has always been known as a core, safe investment. In Upper Manhattan, the sale of Penthouse 41 at Claremont Hall, which is a Robert A.M. Stern design building, broke records for the neighborhood when it sold at $9,989,000, or just shy of $3,000 a square foot. And that increased the price per square foot of the entire neighborhood last quarter. But the neighborhood is known for having a wide range of pricing and housing options. Sales in the first quarter of the year were the lowest they've been in any first quarter since 2009. Now, that's not prices, that's sales as measured in transaction volume. Persistently high mortgage rates really caused many buyers to pause, and we didn't see those rates come off of the 8% mark until the end of December 2023. Certainly, a lack of fresh inventory is something that is dampening demand. And unlike the rest of the country, we are not short on homes for sale, but the inventory level is noticeably lower than the averages, as much as 15%, even though Q1 was up 2% over last year. More importantly, the lock-in effect, that means that sellers who would be putting their homes on the market have mortgage rates so much lower than the current prevailing mortgage rate, is holding back the inventory supply. As these potential sellers look at their options of where they're going to go when they give up that 3.5 or 4% mortgage rate and take on a 6.5% mortgage rate, they realize staying put is their best alternative. The third weakness in the market is the increased cost of home ownership. In New York City, we are seeing many buildings suddenly have assessments, and they can be for very legitimate reasons, capital improvements, or a variety of other things that come up in the normal course of renting a building and owning in that building. But overall, New York City is getting more expensive, much like the rest of the country, and that is causing many people to stay in the rental market. Before we jump into the opportunities, I want to say thank you so much for watching this video today. And if it inspires you or brings up more questions than I can possibly answer in the short time we have together, please DM me or email me. I am always happy to talk about the real estate market. The first opportunity is pricing. Prices are down across all categories, and prices right now are closer to what they were in 2014 to 2016. But be careful when you read the report and you see that it says 10% off. It doesn't mean that the particular neighborhood or category you're looking at is 10% off. According to the Corcoran report, the high market share of resale co-ops, increase in closings under 2 million, and a significant drop in new development sales combined to drive down that sales figure. So check with me if you have questions, if you're buying or selling, and I'd be happy to help you with pricing. For example, right now buyers and sellers have some very different ideas about what is the value of a property. I was working with a buyer for a 3-bedroom co-op. They had one idea about what the price should be, and the seller had a very different idea. So I went back and looked in history to see what the pricing was at the time the current owner bought the apartment and compared it to pricing today. And we discovered that in that particular submarket, in that particular apartment size, prices were only down 4.7%. Improved pricing is most noticeable in the affordable areas. So the median price is down 5%. Right now, it's at $1,050,000. And the average price per square foot fell 14% to $1,640. But again, remember, that's because of how many sales were done below the $2 million mark. During the first quarter, demand was noticeably stronger, as evidenced by signed contracts. They were up 18% compared to the final quarter of 2023, but they were down 6% compared to last year at the same time. Certainly, demand has gotten better since mortgage rates came to 6.5, but I do expect that because the Fed has announced they are not lowering rates anytime soon, that the new pricing and the lower demand, albeit healthy demand, will be with us for a few more months. If you are a seller and you purchase below today's current pricing and you want to sell, it is not a bad time to be selling. There are plenty of serious buyers in the market who are transacting. The most obvious threat is the Fed recently announced that they will not be lowering mortgage rates, and that will keep more people in their homes for a longer period of time, and that will limit the supply of inventory. Again, remember, New York City is not short like the rest of the country. And I'm expecting that below $3 million is the segment of the market that will feel that impact the most, because we note that last quarter, cash sales in the luxury market, as defined above $5 million, increased. The upcoming presidential election is likely to impact sales volume. Historically, buyers pause somewhere around the summertime as they watch the election process and try to figure out how it will impact them economically. Anyone thinking of selling in 2024 should get their home on the market immediately. Okay, let's review the key takeaways. Strengths. Buyers are seeking value and choosing co-ops over condos and new development. The Upper East Side is showing tremendous stability in terms of inventory. And finally, Claremont Hall in the heart of Morningside Heights, a Robert A.M. Stern design building, is selling very well. So make sure you make your appointment soon. Weaknesses: transaction volume is down, demand is dampened by a lack of fresh inventory, and the cost of home ownership. The opportunities in the market are all around pricing, especially in more affordable areas like Northern Manhattan or Midtown. Or if you're a seller and you purchase at prices below the 2014-2016 level, now is a good time to have your place on the market. Finally, the threats to the market, well, they're well known. That is the sustained high mortgage rates in comparison to what they were. Not historically at 6.5, they're actually historically low, but compared to 3.5, they feel higher to many. And of course, the distraction that the presidential elections will provide as we get closer into the summer months. I am Julia Boland, principal of the Boland team in New York City. Don't forget to subscribe so you never miss a video where I bring transparency to a complicated market. Hit the bell so you're notified when new content is posted, especially market updates.